Softening consumer demand taking a toll on Home Depot's outlook for the fiscal year. Here with more on the latest market action in retail, we have Yahoo Finance contributor Remy Blair. Remy there on the floor of the New York Stock Exchange. What's going on?
Well, U.S. equity markets remain mostly lower on this morning. We are seeing the Dow Jones Industrial Average as well as the S&P lower and the Nasdaq trading on both sides of flat this morning. And of course, Home Depot shares are in the spotlight today following its latest earnings report, and shares do remain in negative territory. Earlier, the retail slashed its outlook and also said that it expects annual sales for the home improvement retailer to fall as consumers cut spending and as demand for home renovations and home improvement goods pull back. Meanwhile, taking a closer look at the details out from the earnings report, Home Depot does expect sales to decline by 2 to 5% in fiscal 2023, and that is a considerable pullback considering that earlier this year the retailer said that it expects to see flat sales. Meanwhile, first quarter revenue missed analyst forecasts as well, with revenue down by 4.2% at $37.26 billion. This is the biggest revenue miss since November 2002. At the same time, comp sales fell by 4.5% for the retailer, much more than expected. At the same time, Q1 profit did come in above estimates at $3.87 billion. And this week, we will be getting more earnings out from the retail sector. We have Target as well as TJX companies, Walmart, as well as Foot Locker at the end of this week. Keep in mind that we got U.S. retail sales for the latest month, which did show an increase of 0.4%, but that was half than the gain expected. And ahead of the report, some analysts do expect to see headwinds that are weighing on discretionary spending as U.S. consumers continue to adjust shopping habits as well as tighten household budgets.
All right, thank you for that. Obviously, Home Depot, an economic bellwether there, sending some jitters through the markets today. Big thank you there, Remy Blair.